What's going on, everybody? Welcome into the Monday, November 18th, 2024 edition of the Daily Energy News Beat Stand-Up. Here are today's top headlines. First up, Trump picks oil service boss Chris Wright as U.S. Energy Secretary. Oh my, this is a great one. We will cover all that. Don't worry, guys. Love that. Next up, U.S. breaks dependence on gasoline imports depending on what part of the country you're located. Ooh, interesting there. Next up, Scholz, not to be confused with friend of the show, Sergeant Scholz. Scholz urges Putin to enter into negotiations with Ukraine in first phone call in 2 years. I'm glad his phone works. Next up, this one, I don't know if this is parody or truth. We'll let you, the listener, decide. China could lead climate fight if U.S. drops out. Interesting there. Finally, sticking in China, Xi reveals Beijing's 4 red lines to Biden's stool, then toss it over to me. I will quickly cover what happened in the oil and gas markets on Friday. It's story of the day, guys. Weaker demand leads to lower prices. We'll quickly look at rig counts. Drill, baby, drill, but we're losing rigs. We'll cover all that. And then finally, we've got a little acreage swap. Ovintiv goes ahead and sells their Uinta, Utah Basin stuff and picks up more Canadian shale. We will cover all that and a bag of chips, guys. As always, I am Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Hey, let's start with Trump picks oilfield services boss Chris Wright as energy secretary. I'll tell you what, quote unquote, Chris, yay! Chris has been a leading technologist and entrepreneur in energy, Trump said in a statement. He has worked nuclear, solar, geothermal, oil and gas, and most significantly, Chris was one of the pioneers who helped launch the American shale revolution that fueled American energy independence and transformed the global markets and geopolitics. I want to just share this for Chris Wright. Chris Wright is a rock star, and Michael, I met Chris years ago at Intercom, and I sat through one of his first speeches there, and I was like, whoa, wait a minute. He talks about ending energy poverty through the use of fiscal responsibility and fossil fuels and nuclear. Let's use all the above. Have you heard me talk like that? Chris has been instrumental in how I talk on this podcast. And Chris Wright, when he came on the podcast with Doomberg, that has gone through the roof. He is a rock star. Now, I'm going to say this. Chris Wright is critical for Donald Trump's ability to lower the consumer energy prices, and Chris Wright will be a significant factor to all Americans in a lower energy price. Chris can do it.
Absolutely. This is an outstanding pick. When I heard his name floated a couple weeks ago, I said, wait, is this true? Because this is Christmas in November, if true. You said it right. Nobody better, in my opinion, understands the dynamics of how to actually regulate the energy business that Chris Wright. Now, something that's a little bit, you'd think the Secretary of Energy regulates the oil and gas business. Not really.
Yep.
It's actually who has more effect on the energy business is ironically the Department of Interior, which is led by Doug Burgum. Now, what Trump has done in what I think is a stroke of genius is the Council of, what is he calling it? The Council of National Energy, which is actually chaired by the Secretary of Interior, in which Chris Wright will now sit on. So you've got both people, one who has more control. Remember, the Department of Interior has much better control over pipelines, which that's really the big issue right now in the oil business. Yes, we need to fill up the SPR, which obviously the Department of Energy does that. But really, from a nuclear standpoint, you should be much more thrilled that Chris Wright is in the Department of Energy than anybody else, because he's a big advocate of nuclear. You should be very thrilled if you're in the oil and gas business, because Doug Burgum is probably going to approve these pipelines like hotcakes, which is really the big key right now. It's ending the regulation stalemate that we're in right now. Both those guys are going to be great. I love what Trump is doing right here. I mean, you couldn't have picked he couldn't have picked anything better. I mean, outside of maybe, his cabinet, outside of a few picks, which we can talk about as so, is shaping out great.
Oh, absolutely. And now here is one thing. The EPA is also in this mix because the way that he is really going to lower energy costs is get rid of energy regulatory oversight and overreach. Well, you throw in, I believe it's less that that was running as the governor for New York is the head of the EPA now. I mean, now you throw him into this mix. Holy smokes, Batman. You got Burgum, you got Wright, this is a hall of fame. This is like going to an MMA fight and having the winner of the fight do a Trump dance. Holy smokes.
Absolutely. All right, what's next?
Let's go to the next one. U.S. breaks dependence on gasoline imports. Hold on. Depending on what part of the country you're located. This is an excellent oilprice.com article. U.S. refiners saw their average earnings share decline to 25 cents this past quarter from $4.75 per barrel in Q3 to $4.85 per barrel in Q3 2022. Nevertheless, shareholder returns remain very robust. Listen to this, at $5.2 billion in total. This is between Valero, Marathon, and Phillips 66. And when you talk about the importing of this, you talk about transatlantic importing. Now, where is this being imported from? Take a look. Brazil, Mexico, Puerto Rico, Canada, and others is California. And California is China and all these others. So, it's pretty funny. Chinese overcapacity has become one of the key market trends.
Yeah,
unbelievable.
Who would have thought California is bringing in crude oil from not the United States? Who would have guessed?
Well, yeah, Phillips 66 is bailed out because of the Governor Newsom regulatory overreach. Let's go to the next story here, Michael. Scholz, I see nothing, urges Putin into negotiations with Ukraine on first call in 2 years. Michael, I'm going to brag on myself for half a second. I saw this. I called it. I said, you're going to see a war, end of the war in Ukraine. You're going to see the cheap Russian natural gas is going to be the only way Germany can reindustrialize. You still have Nord Stream 1 pipeline. Yeah, of the 4 pipelines, one is still capable of being turned back on. You have all of this. Let's look at this. Scholz urged Putin to end the war. Russia could enter into serious negotiations with the aim of achieving and lasting peace for Ukraine. What a crime scene. German media reported in October Scholz was considering a phone call with Putin ahead of the next week's G20 summit in Brazil.
Well, here's the thing.
They've got to refire their nukes. They got to fire.
Yes. I think we should all come to the negotiating table. I think the interesting part about this is, what were you doing for the past 2 years? You really were sitting there like, I see nothing. And now all of a sudden, boom, we got to jump on the phone. So it begs the question, what have you been doing for the last 2 years? And should the war in Ukraine come to an? Absolutely. We need to figure out a way to get this over with. But what's already done is done. We can't go back 2 years ago and stop this from happening. Maybe we should have tried that 2 years ago before hundreds of thousands of people died, hundreds of billions of dollars were flushed down the drain, if only for this stagnate to continue. So we have to negotiate right now from where we're at. You could, reports are coming out that now the reason why everyone's freaking out is because there's the involvement of these North Korean troops, which is a disaster, by the way. I mean, you want to talk about a humanitarian crisis. Now Putin's just throwing North Korean bodies at this. I mean, it's just not good. We need to bring an end to this war. And, yes, we need Russia at the negotiating table, but maybe should have tried this 2 years ago.
Yeah. But the underlying current, there's a couple underlying energy threads to this story. That is the green energy policies and the overreach of trying to do fiscally irresponsible energy policies. The UK has said, Hold my beer, Germany. You're about to see the deindustrialization under process in the UK. Let's go to the next story, Michael. China could lead climate fight if the US drops out. Michael, COP29 is a disaster. You can't buy this kind of entertainment. When you had one of the head of the COP29 hosting countries trying to do oil and gas deals, you can't buy this kind of entertainment. Let me read you a couple quotes in here. However, the developed economy countries certainly believe that China should be contributing, the South African minister told Bloomberg. If it's going to be the superpower that global superpower may aspire to be, then it needs to show some leadership. The pace at which China will reduce its greenhouse gas emissions will be critical to reaching global targets. Fight climate change, German climate envoy said this year. It's a crock of crap. COP29 is now, I think that you're going to see, and Chris Wright has come out and said, climate change happens naturally, but the way you combat it is flat out reducing your CO2 through good energy policies and natural gas. That's exactly what the United States has done again, is we've reduced our CO2 outputs by natural gas. China has done nothing. They are polluted their entire country. That's why they want global outreaches, because they've ruined the Chinese water tables and they are polluting and they don't care. How can they be a leader in this? They can't.
Well, no, they can't and they won't, but this is their, speaking of what we're going to talk about in the next article, this is part of their 20-year plan to continue to undermine what we're doing in the United States. I mean, there's absolutely no way China, the largest importer of coal, the largest, quote unquote, largest importer of other fossil fuels, if you want to consider that climate induced. I mean, they're also the global leader in renewable energy investment, but they're the leader. I mean, they're the world's second largest economy, and they're government controls the spending, aka they can spend their money on whatever. So they're going to be the world's leader on a lot of different stuff. So,
That's right.
That's like saying, there's some analogy I can't come up with right now, but there's an analogy that covers that, no doubt. You sometimes
hold that thought.
Hold that thought. But yeah, COP29 is becoming a disaster. Are we going to get you there at COP? We got to get you at one of these COPs. I need you live.
I'm too old, because I would absolutely tell people what I think. And if I could walk up and see John Podesta, oh my goodness, or Bill Gates there, I would have so much fun. Get them on a podcast. Okay, let's go to reveals Beijing's 4 red lines to Biden. And I heard President Xi tell Biden, don't. The Chinese warned the U.S. president again trying to hold back the country's economic development. As 2 major countries, neither China nor the United States, should seek to remodel according to the other one's will, suppress the other from so-called positions of strength, or deprive the other of legitimate right to development as to maintain its leading status, Xi said. A new Cold War should not be fought and cannot be won. Containing China is unwise, unacceptable, and bound to fail. So this is the same guy that just put President Biden, which I would have done as well too, possibly, I just want to say this, in the back row. And President Biden didn't know where he was. So in all fairness, they didn't want the full depends up there in the front row. This is an embarrassment to the United States.
Well, I think they feel like they've got 3 or 4 months before, or it's 3 months before Trump takes office. They're going to probably do all they can in order to assert their power. Now, it's going to be interesting with this whole tariff talk on China, what happens, because that, one of the reasons China is able to develop so, critically as a country is because the United States relies heavily on their import. Now with a 60% or whatever tariff Trump's going to put on there, I mean, it's going to be very interesting. You're going to see prices at home rise, which means we're going to have to cut somewhere else to balance out the price increase of everyday goods. Trump's talking about, what if we get rid of the income tax to offset higher tariffs? That can work. If it works out to be net neutral, we're good. But China's going to suffer. China doesn't want tariffs because most of the goods that they sell are sold to the United States. They don't consume a lot of their own goods.
No. Now, this brings up the whole thing. Everybody's saying, oh, tariffs are bad to the consumers and it's going to raise consumer prices. No. In 1913, 1912, before 1912, there was no income tax. And consumers, the government was funded by basically, I believe it was less than 10% of GDP and tariffs. Tariffs funded the government. So once you got cutting the government, slashing the government expenses, you can live off of tariffs and not impact consumer costs.
Well, we're going to
The end of the
agree to
Fed,
disagree on that. If we want to talk about what was going on in 1913, we still had Jim Crow laws in 19. So what are we going to bring those back too to balance everything out? I mean, the worst argument in the world is, well, in 1900s,
that
this
is
is
totally
time out. The worst argument, the worst argument in the world is in 1900 we did this, so that means in 2025 we have to do this. I agree with you.
I said that. The reason I said that is the Fed. The Fed may get ended.
Yeah, all I'm saying is tariffs they're going to raise prices. We're looking at a master's degree in economics on the board right there. I'm telling you, tariffs are going to raise prices. Now, if prices raise by 15% and you cut the income tax at 15%, guess what? You're net neutral.
Exactly.
That's what. But don't try to argue with don't try to gaslight the American people by saying, well, your prices won't rise. Oh, they're going to rise. It's just a matter of where are we going to pull the money from?
But if you offer the tax discounts for manufactured goods in the United States for the same product, people are going to buy the American brand.
Yes, but there's not enough goods being made in America to where you can flip that like a switch.
It's not a switch. But
I know. So there's going to at least be a period of higher prices. So you immediately have to do something on the back end. That's all I'm saying. I'm not against tariffs in an ideal world. The problem is you have to understand, we talk about second order effects. It sounds very nice to say tax China, lower the income tax. Well, what's the second order effect of that? You see what I mean? And I no, you can't argue with me about, well, back in 1914, this is what we did. It's like, okay, well, that economy, it was a quarter.
Well, hang on, because the financial systems are going to change. And when you take a look at what got us here, Michael, you always have to look at history on how we got here.
Well, now it's really the gold standard. It's going off the gold standard is what put us in the situation we are now.
Exactly.
But that's got nothing to do with tariffs and whether tariffs raise prices or not.
No, I disagree, because once you get off of the gold standard, why was JFK killed? Hang on.
I don't.
JFK, 10 days before he was killed, put us on the silver standard.
Okay.
Anything else going on?
Yeah, yes. You got anything else?
Not today on that one. Let's get off of this discussion.
Yeah. Well, before we move over to oil prices, guys, we got to pay the bills for who's ever left listening. As always, the news and quote unquote analysis you just heard is brought to you by the world's greatest website, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit the description below for all links to the timestamps, links to the articles. You can also check us out on Substack, theenergynewsbeat.substack.com. Go ahead and give us a little subscribe there. We appreciate everybody who has paid for our Substack as well. Remember, you can subscribe for free, but you only get 2 weeks. You only get the last 2 weeks of articles for free. If you want to see the entire archive, that is where you need to upgrade to a paid subscription. We appreciate everybody who has done that. Go ahead and subscribe to our YouTube channel, guys. We're trying to make that final push here towards the end of the year. As always, guys, it's the middle of November. If you have a tax burden in 2024, fill out our survey that's in the link below, or go to investinoil.energynewsbeat.com. Guys, I'm telling you, if you have a tax burden, there is a way to mitigate that. Investing directly in oil and gas is one of a few ways to lower your tax burden. It's also a great way to diversify your portfolio, and it's a great way to not hand money to the government. And it's a great way to call yourself an oil man when you're going to all these holiday bars. Think about Thanksgiving. You can literally tell people you are the next Harold Ham. You can tell your crazy uncle that you are the next Harold Ham. And what? You're like, oh, I've invested in oil and gas. You can blow their mind by telling him that you're an oil man. But seriously, guys, in all seriousness, if you are paying taxes in 2024, There's a way to avoid that. Hit the link below, investinoil.energynewsbeat.com. We'll get you all the information on how you can do that, and we'll point you in the right direction. But let's go ahead and move on, guys. Markets are frothy right now. We've had some interesting stuff happen over the last couple days. I'll go ahead and read some of these top line headlines. Market's not good on Friday here. S&P 500 dropped about 1.3 percentage point. NASDAQ was down 2.4 percentage points. 2 and 10-year yields, it went in the opposite directions. 2-year yields were down 1 percentage points. 10-year yields held flat. So for the first time now, we've got 10-year yields above 2-year yields, which means that's spicy right there, Stu. Spicy. Dollar index fairly flat. Crude oil dropped about 2.4 percentage points, closed just above 67 at 67.02. Looks to open slightly below $67. Brent oil dropped to 71.29. That's a drop of about 1.8% or 1.18 percentage points. Natural gas down to $2.80 or up to $2.82. That was up about 1.3 percentage points. We make LNG great again. Our XOP contract dropped about a percentage point based on that oil news. Pretty interesting. I mean, mainly what's going on is there's been some much more. We've been talking about China demand. Well, finally, I think on Thursday and Friday, we're getting more information of some official Chinese demand dropping. And mainly what you're seeing is we did see on Friday that Chinese oil refiners in October ran about 4.6% less crude on a year-over-year basis, both the IEA and OPEC. So remember, IEA, they're doom and gloom. They'll tell you oil's dead. Peak oil happened 4 years ago. OPEC's the opposite. Oil's great. Peak oil's in 40 years. When they agree is when I take note. And on Friday, they agree, both down forecasting Chinese demand and both of them actually coming out and saying that supply might outstrip demand in early 2025. Which, again, we're talking about a physical supply and demand commodity could continue to do that. We're also looking, again, we talked about the tariffs on crude oil or the tariffs on China, which could affect crude oil. We also are, really thinking about what's happening from the Fed rate cut standpoint. It's looking less and less likely that a rate cut could come. Basically, this is a friend of the show, Tim Schneider, Matador Economics. He came out in his note on Friday and said he wouldn't be surprised if we didn't see a rate cut in December based upon some of the numbers. Fed Bank president of Boston, President Susan Collins, didn't rule out a December rate cut. She was on Bloomberg on Friday talking about this, but it doesn't look as if there's going to be a rate cut 100%. There's now a debate, which is what you're seeing reflected in these market numbers. So it's very frothy right now, guys, from the standpoint of, I think a lot of what we've definitely been gaslit into pretending the economy is good when it really isn't. There's a reason why they're raising rates. It's going to be even now more interesting with President Trump coming back into office. He's slamming on the table to lower rates. Well, the problem is the lower rates go, the more money we flow in. The problem is we got to this point by printing a lot of money. So it's really a catch-22. You can't cut your way you can cut some, but you're going to have to raise revenue somehow. And partly why I think that's why he's talking about tariffs. But now going back to the everyday American and the expense standpoint. So there's a lot of stuff going on. There's a reason why, in my opinion, he hasn't come out and picked a Treasury secretary yet, because there's this big internal debate in Trump world about what do we actually do to get the economy starting again? And I think he's got people on both sides in his ear. We saw on Twitter, people were going crazy for one side. The Cantor Fitzgerald, I forget his name, but he's the CEO of Cantor Fitzgerald, is who Elon, RFK, and all them won. And then we've got the more obviously established pick. I think, again, the debate between who he's going to choose is going to come down to what side of the argument he falls. We did see, you can go ahead and throw this image up here. We did see rig counts on Friday drop by 1. So hey, drill baby drill, I guess. But again, with I think people are reacting to and are starting to line themselves up for a lower oil price environment, in which you probably will see rig counts come down. We did see a drop of 1. Canada dropped 7 internationally. We did see them pick up 3. That's down 34 from a year prior. The only other thing I saw, Stu, on Friday was Ovintiv. They did a little acreage swap. They go ahead and pick up some core Montney assets, which is out of Montney Shale, which is out of Canada. This is an agreement to purchase 109,000 net acres and approximately about 70,000 BOE per day in the core Montney Shale there in Alberta for about 2.37 billion, or about 3.33 million Canadian dollars. Adds about, according to them, about 900 well locations. I love how they put including 600 premium. And when they say premium, let's go ahead and take a look at the footnote here. Premium well locations are defined as generating a greater than 35% internal rate of return at 55 WTI and 250 or 275 MMBTU natural gas prices. So apparently they got a lot of core stuff there. And then approximately 300 upside locations, and adds to their current Montney oil acreage, giving them about an extension of inventory of about 15 years. They've also, in the same process, reached an agreement to divest their Uinta assets over there in Utah for $2 billion. So they basically are shifting around where their acreage is, which is interesting. I was actually talking to a buddy of mine 2 weeks ago about basically the Uinta Montney, not divergence, but where, the thinking about why a company would want to dive into the Uinta when there's actually a lot of stuff going on in Canada, which seems to be probably the low-hanging fruit right now. I mean, most of the Permian is leased up and drilled up, to be honest with you. If you're going to go attack a bunch of this acreage, you're going to have to pay a pretty premium penalty. 4 Point Energy was the company that came in and actually bought those Uinta assets. The interesting part about the Uinta is the refining situation. It either goes to the West Coast and is refined down there, or it's trained all the way down to the Gulf Coast because it's extremely waxy and there's no actual refineries in the area that can do that. So your differential on a lot of this Uinta stuff is huge. And as you remember, we saw SM come in and buy XCL. Northern came in and swung a chunk of that off. Ovintiv was the last player in town with undeveloped acreage in the Uinta. So now a lot of it is somewhat leased up. I don't expect 4 Point Energy to be flipping it anytime soon, but a really interesting flip here. I have a feeling we're going to be doing a deal spotlight on this one, so hang tight there, guys. We will be dropping in some stuff there, but there's a lot to dive into on this from the Ovintiv standpoint. But getting back, remember, Ovintiv used to be in Canada, and Canada was huge up in the Bakken and Canada, so it makes sense that they end up moving back. That's all I've got, Stu. What else should we be worried about this week besides JFK's assassination?
Well, no, actually, take a look at RFK Jr. as he's eating McDonald's. He's posing in front of that on Trump Force One, and it is absolutely hysterical. You have Mike Johnson, the Speaker of the House, you have his son, you have Trump, and then you have RFK Jr. making America healthy again, looking at a McDonald's hamburger going, can I throw this away now that the photo op is done?
I saw this meme. It was Nancy Pelosi on the phone, and it said, buy beef tallow stocks. Funny stuff, guys. All right. Well, with that, we'll let you get out of here, get back to work, start your week. We appreciate you starting your week with Energy Newsbeat. For Stuart Turley, I'm Michael Tanner. We will see you tomorrow, folks.